changed ahead of Jackson Powell, or rather Jackson Hole speech of Jerome Powell, his last one at that. So about a 150-point dip is what the Dow closed the day with. It was a mildly soft close for both the NASDAQ as well as the S&P 500 as well. Asia, though, is a little bit of a mixed bag. Hong Kong, Shanghai, they're both mildly higher right now. Japan as well, just marginal of an uptick of about 87 odd points is what it's currently at. What about the implied open then? And we had a decent day, range bound, sideways so to speak, but it was a buy figure nonetheless from both the FIs as well as DIIs. The implied open still sticking by with that 25,000 mark, and I think that's the key technical level to really look out for. Can we take it across to Rajeev Agrawal and figure out what he's making of all the dynamics in the markets right now? We will do that in just a bit. But like we said, talking about D Street right now, it was Pharma, realty, IT, these were the sectors which managed to do quite well. FMCG is seeing quite a bit of churn within sectors. So newer set of stocks have been emerging as winners, as opposed to, of course, white goods, which as a segment has been doing very well of late. But yes, autos, metal, energy, PSU banks, these were the sectors which did see a little bit of profit taking set in yesterday's trading session. And again, within there also, it was a very selective move. There were banks which also held out in the green. But let's find out what Rajeev Agrawal has to say about all that's going on in the world and how it's going to impact India. Rajeev, hi, morning. Good to have you on the show as always. Firstly, your thoughts on all the commentary that's coming out of, both Alaska and what the Minister of External Affairs, S. Jaishankar, had to say about the import of Russian crude oil, which seems to be the bone of contention between US and India right now.
Yeah, good morning. I think it is quite obvious that both India and US are hardening their stance in terms of the tariff issues. And clearly, oil initially looked like an issue which was a side issue, and it is becoming more and more of the central issue. I personally think really the more fundamental issue is that India and US have to work together. The tariffs are a minor issue, and I think it should not poison the relationship. But the way things are going, really it is becoming more and more harder for the two countries to work together because both the countries are increasingly hardening their stance, which I think is not good for the long-term relationship then.
That said, Rajeev, I guess that's, all going to depend on diplomatic relations, and especially in the light of Navarro's comments just last evening. What do you think the markets need to look out for? Because I think in the very near term, you'll have Jerome Powell's last Jackson Hole speech. Any indication or hint on which way interest rates are going to move?
Yeah, no, absolutely. On the interest rate, I think there are indications that the inflation in the US is going up. And as the inflation goes up, I think Jerome Powell is really stuck between reducing rates, which is what Trump wants, and taking care of the economy, which possibly is overheating. And that was expected given the tariffs and therefore the cost price going up. So I think it's a pretty difficult situation that Jerome Powell finds himself in. And I think as more and more of that information starts coming in, I think that will possibly make it obvious to people that, too much of reduction in the interest rate may not be possible. I think balancing that is what the Treasury Secretary is saying, where he is expecting very significant cuts in the interest rate. So we have to see how the numbers look. But so far, what I am seeing, it feels to me that the interest rate cut, there might be limited opportunity there.
Right, Rajeev. Hi, morning. Want to get your thoughts on the commentary that we've heard from both Russia and China, because, both of them, first Russia said that if the US is not open to taking India's goods because of tariff, the Russian markets are open for India. And similarly, yesterday, we've got a similar commentary coming in from China as well. What are your thoughts on this? Who stands to gain the most, because now both China and Russian markets are open for India?
Yeah, no, it's very interesting how the pivot has happened, right? A month back, we would not have imagined something like that would have even happened, right? I mean, Russia, okay, but not China. So the fact that suddenly the whole geopolitics have dramatically changed tells me that it's all a matter of convenience for all the parties involved. And I think, as I was saying earlier in my interview here, that it is very important that one has to look from a long-term perspective, and I don't know how it will play out, but clearly India is trying to get some bargaining position. And I think this is one way of having that bargaining position, which I think is a good way, because especially with the SEO meeting coming up, I think having that offset vis-a-vis the US is important. And I think this is that offset.
So Rajeev, what's in it for the Indian investor? Well, you've got the GST rationalization, Philip. What should the Indian investor be focusing in on?
So actually, Indian investors, you look at the amount of money that is coming in from the Indian retail investors. I think it has more than taken care of all the outflows that we are seeing. And as long as the Indian investors continue to pump in money, and I think there is a lot of money still sitting on the sidelines in cash, in mutual funds and other places. So clearly there is decent dry powder available. And so I think there is given the inflow and given how the market feels that really this tariff situation will not be a big issue in terms of the economy performing, I think this may be more of a sideshow than really something that will impact the Indian market. I think what will hurt Indian markets is if the performance in terms of the quarterly numbers don't come as we go forward, and that is something that we have to watch out for.
All right, that's the sector take. But Rajeev, back home, a lot of these sectors, be it from auto, FMCG, they are showing very good moves. What are your sectoral picks right now when it comes to the Indian markets?
Sure. So actually, I just forgot about the GST question that was asked earlier. So no, I think GST, the 5%, 18%, I think those are clearly what are driving the market. And I think with Mr. Modi actually mentioning that from the Red Fort, I think clearly the markets have taken that as a big positive. And so that is one thing which I do expect will drive the Indian economy if there is a decent rationalization there. And that will allow many of these sectors, like you said, auto, FMCG, where there has been a little bit of a subdued demand, I think that can again start picking up. And so I do expect that Indian economy may get a boost because of that. And frankly, it's not a big issue in terms of how much revenue is lost. So I do think that's a huge positive. There are many other positives that can come if there are more reforms. Now, coming back to your question on what sector picks, frankly, we have talked about BFSI. I continue to like BFSI because BFSI has been hurt in the past. Some of the auto segments can also start doing well as the demand picks up, because I do think India has a pretty strong presence, and as the auto demand picks up, there are many players in India who can do quite well as the auto demand picks up. So auto demand, FMCG, a little bit more careful there because FMCG is already priced for it. And so one has to be a little bit careful of how much is the growth that you expect and what the valuations are. So that is what I would say on FMCG.
Okay, so that's the take coming in. Rajeev, thanks so much for your time and good chatting with you this morning.